Let's break down the pros and cons of a DSCR loan for you in 2025. This program is one of the best financing programs available for real estate investors across the United States. For those of you who don't know me, my name is Aaron Page. I've been a mortgage broker for 14 years, mainly operating out of the Pacific Northwest. However, at my company, we are able to service the entire United States, with the only exception being New York. I want to quickly remind you guys what a DSCR loan is. It stands for debt service coverage ratio, and that basically means, does the property cash flow? Does it make enough money in rents to service the mortgage payment, making it a 1-to-1 ratio, and simply operating off the fact, will that property support itself with no other outside factors based on market rents? The main reason people like these DSCR loans is because you don't have to show any income and you barely have to show any assets unless it's a purchase. You just have to show simply that you have the money for down payment as well as the reserves. And if the property cash flows, you're good to go. First, let's dive into the pros of a DSCR loan. Number one pro I've already alluded to is there's no personal income verification on this. So if you make $2,000 a month or you make $200,000 a month, it doesn't matter in this. This is simply going off, will the property cash flow? So you're not going to be providing, like with a conventional or an FHA loan, a bunch of paperwork like tax returns, W-2s, pay stubs, none of that on here. This is property based and is a commercial business use loan. Outside of the income piece, the second one is that there's no limitation on how many properties you can finance. When you use traditional financing, again, conventional financing for investment properties, you typically can't finance more than 10 properties. When you hit that 10 property threshold, Fannie Mae or Freddie Mac will no longer allow you to finance more with them as investment properties. But like I alluded to as well, with this being a commercial or a business use loan, there are no limitations to the number of properties you can have financed using a DSCR program. The third pro to a DSCR loan is you can finance everything from a single family unit of one individual unit up to 29 units, which would be a small to medium sized apartment complex. You can do duplexes, triplexes, fourplexes, multi units of any kind up to 29 units. I don't really know where the 29 came from, but with all the lenders I work with, that seems to be their hard and fast cutoff. Apparently, when you hit 30 units, that's just a no-no for some reason. The fourth pro here is long-term financing options with DSCR. You can do a 30-year, you could also do a 40-year, and you can also do an interest only on either of those programs. If you're really focusing on cash flow, you could do an interest only 30-year to just pay the interest balance every month on your money that's accruing while you're gaining rents or receiving rents and gaining property equity over the years. The fifth pro is it allows for short-term and long-term rentals to use as market rents for the property. So if you are looking to buy properties for Airbnb, for example, when we order the appraisal on the property, we let them know that this property is going to be a short-term rental Airbnb unit. So when they determine the rents of what it would Airbnb for in the area and to determine what's standard for that area, they will factor that in for your rents to offset your mortgage payment. So not many programs will allow for short-term rentals, but this is definitely one you want to look at if that's your goal. The sixth pro is that for the most part, their reserves are fairly minimal. You need 3 months of reserves. And as what that is, it can be in a 401k account, a liquid checking account, savings, anywhere where you're holding 3 months of the mortgage payment that's proposed on that property. So as an example, let's say your property is going to have a $3,000 a month house payment. You need an account that shows you have $9,000 available in case anything were to happen. You have the next 3 months of that property payment covered in reserves. Another side note on that, if you do a cash out refinance DSCR, the cash out that you take out of your property actually qualifies as reserves because you're getting that money at the end. In a lot of situations, your cash out amount cannot be used as reserves, but DSCR does allow for that. The seventh and last pro that we're going to go over on DSCR loans is the ability to close into an LLC. You can actually close into an LLC, and these loans will never even touch your personal credit. Since this is a business purpose loan, not all lenders report a DSCR loan that closes in an LLC to the individual that initially purchased that property because it's a business entity using a business purpose loan. Now, let's go over the cons of these loans and what you need to look out for. Given the type of loan this is, the very first one we're going to touch on is prepayment penalties. A lot of lenders want to make sure when they're giving you money for an investment property with very little income documentation, there's actually none at all except making sure the property cash flows. They will include a prepayment penalty because for the risk they're taking by leveraging the property and the money to you, they want to make sure that they have X amount of time where they're recouping some of their money via interest. Is what we typically see are 1 to 5 year prepayment penalties, and the interest rates vary based on which one you select. But also keep this in mind, some states, and it could be your state, don't allow for prepayment penalties. So when there's no prepayment penalty, the interest rates are typically higher. The second con is you would probably assume this already, but the interest rates are higher on a DSCR loan than they are in a conventional loan. We see them anywhere from 0.5 point to 1.5 points higher. And just keep in mind, you're not sourcing any income and you're barely sourcing any assets, and you're doing a business purpose loan. There are adjustments and there are risk factors with that happening. So if you're looking for the lowest rate possible and you qualify for a conventional investment property purchase, that's the way to go. If you don't want to show a bunch of paperwork, or you might not qualify traditionally on conventional, this may be your only option, but it's still an option. The third con is DSCR loans can, not saying they will, but they can have higher fees. Most of the time, lenders also charge an origination upfront. So on top of a prepayment penalty, that was item number one, you also should expect to have a 1 to 2% origination charge on top of a prepayment penalty being factored in as well. The fourth con is barrier to entry. It's not always easy to have 20% to put down. A DSCR loan, you have to put at least 15% down, and at 15%, the rate is pretty brutal, just fully transparent. The difference between 15% and 20% is pretty staggering. So you can do it at 15% down, 20%, you're going to get the best rate, but it's not like you're putting 3% down and buying an investment property. That actually doesn't exist anywhere. The fifth con is that the property has to cash flow. In most cases, there are lenders that will allow you to have a 0 to 1 ratio, meaning the property doesn't have to have any money coming in. It doesn't have to cash flow at all, and they will still lend you the money. But again, everything ties back to the interest rate will be very, very gross. So ideally on these loans, you want to look for a 1 to 1 ratio. If your proposed mortgage payment is $3,000, you want to make sure that property is bringing in $3,000 a month in income to have a 1 to 1 offset ratio. Sixth con is credit score requirements. It takes at least a 620 to do these loans, and at 620, you're going to have about 30% to put down. Ideally, you want to be above a 640, but as with credit and all things, the higher the better. If you're above a 720 and you're putting 20% down, you're going to get a significantly better interest rate than someone who has a 620 credit score and is putting 30% down. It's the way the numbers work. It's how these lenders do everything with credit scores. So the higher the better. 620 minimum, 720 plus with 20% down is going to get you the best of the best. That right there is a quick rundown of pros and cons for a DSCR loan. If you've never heard of the loan before, or you have any other questions, feel free to put them in the comments or reach out to me directly. All of my information is tagged and keyed here in the video. You can also find it on my profile. You can find it on my link tree. I'm not hard to find. I want to thank you guys for watching, and if you have any questions at all, please reach out and keep your eye out for more videos. If you found any of this content helpful, please like the video, share it with anyone who you think may find it helpful as well, and don't forget to subscribe to the channel.